Hey everyone, Kilian aka Ant-Man here. Um, so yeah, I'm a little late because of a lot of personal stuff on the holidays, but it's finally here, the yearly recap. So yeah, we're currently facing the most favorite exchange of everyone. Of course, it's Kraken. To just go over some things, my expectations for 2026, and also what happened this year. The behavior we've seen, especially the trading behavior of our the majority of users, and what we can learn from it. Now, yeah, let's first just get started with Bitcoin. So people who are just here for expectation management for next year can move on. Um, yeah, from what I've seen, I think this entire structure is kind of a range. So right now we are looking to maybe sweep range lows. We might retest the mid range, which I think is around 100k, or we might even retest like this part and maybe even all the way up to all-time highs, which I think is really unlikely given the current circumstances where there's simply no liquidity. So what I'm looking at is basically a sweep of the lows, maybe even towards 70k, after which we will be sucked back into the range where we will continue to range, maybe retest, reject, and then do something like this. That's one of the scenarios I think is quite probable for Q1 next year. But until I think the second week of January, I think there will be no trading activity whatsoever. So we will remain inside this range. We will compress um, like this, and eventually we will break out. But right now it's just gonna be low liquidity chop, and just take a look at the 1 hour. Imagine trading this manually. Yeah, that's getting your ass handed to you basically. Yeah, so yeah, that's basically what I expect. And for next year, I think it's pretty hard to make very big predictions. I'm a bit conservative. Last year, I was pretty bullish. The last year's recap, I don't want to say predicted, but I kinda did. I kinda predicted the bull market, and yeah, the new all-time highs and everything. But right now, I think I'm conservative, and we might, to be honest, we might even break down towards, yeah, I think the 70 to 50k range. Let's remove this, give you a little bit of a more clear picture. Something like this. That's something I can also see Bitcoin go into, where we continue to range, retest, maybe do something like that. Overall, I still think you can be bullish on crypto, and especially on majors like Bitcoin, Ethereum. Solana, however, yeah, we might want to take a look at the chart of Solana. Here we are. So yeah, Solana I think has been very weak lately, and that's also one of the majors we are running at Auto API. But I think yeah, it looks kind of weak and it's kind of scary because if you zoom out, you can tell that there's basically there's something over here which is already a 30% deviation. But after that, we drop straight down towards 30, maybe even 25, which is a decline in price, decrease in price of up to 80%. So what I kind of hope is this to be broken, this current structure to be broken, and where we start to sweep like this level, this level, this level, this level, this level, and use it as fuel to just continue like something like this, something like that. That would at least reset the risk of the majority of Auto API. I think the most of them will reset around 170, 160, 170, somewhere around there. And that's where we are likely to yeah, redo our analysis and take a look at what our API set system is telling us. And we might just remove Solana because this is looking very, very evil, basically. It's looking very, very bad, not literally evil, but you can tell that this is just the range, and if we fall, we have this level, and after that it's just a sheer drop to these levels, which is yeah, I think around 50%. So yeah, that's kind of dangerous, and I don't like it. Yeah, let's also take a look at Ethereum. Now we're at it. So here we are. Yeah, I think ETH looks kind of similar to Bitcoin, other than the range is a little bit bigger. Don't get me wrong, I haven't been doing a lot of technical analysis lately because I think the market has shifted from a purely technical prediction kind of market towards something bigger where the macroeconomic events play a extremely large role in where price is going. So I don't see it as the holy grail anymore. I mean, 2021, 2020, 2021, it was just amazing. TA literally worked 99 out of 9 times, if that made any sense. But right now, I think, yeah, we're just ranging as well, where the range is a little bit bigger. Like I think this is around the mid range, something like this. Yeah, something like this. But there will be more deviation than on Bitcoin. Like it will be more volatile, more aggressive because yeah, it's just not Bitcoin. It's a little bit smaller. Um, yeah, but ETH I kind of expect to do pretty poorly coming into next year. I also think we're gonna sweep these levels before maybe retesting these highs. So yeah, that's really something to take into consideration starting your setup in 2026. Um, that we're likely to see more downside before we see upside. Um, because a lot of big players, they're currently on holidays and they're not like invested at all. And also a lot of market makers providing liquidity to Kraken or even Bybit. They're off the book, so they're not actively trading right now, and their algorithms are just offline, which means the market is a lot more erratic and likely to, yeah, have big flushes to the downside, but also to the upside. But most of the time, it's just to the downside, where some big cat on holiday thinks, okay, this is a very nice price to buy. Actually, I think it's undervalued, and I'm even just gonna buy from my phone. So yeah, that's where they start layering in until they're back at the office, where yeah, they're gonna be a little bit more sophisticated. But what you're seeing right now is just chop as well. Take a look at the hourly. Yeah, it's just similar. Good luck, have fun trading this manually. That's all I'm gonna tell you. So yeah, that's basically it from a TA technical analysis perspective. I think next year will be challenging. Um, yeah, I think the war is gonna end in Ukraine, which should have a positive impact on the macro. But then again, we have the United States with not the most stable president of them all, which could steer up the pot a lot, causing more volatility to either up or downside. But right now, it hasn't been very favorable of what I like to see. Let's go back to Bitcoin. As you can tell, yeah, we've seen some upside on Trump, of course, but right now, yeah, it just started to die off. So I think we really need a rinse before we can move on. All right, okay, let's take a little break. I'm gonna drink a little tea, and then I'm gonna talk about what we've seen in trading activity on your setups, because that's really something we actively track to reflect with you guys on how you could improve, and basically, yeah, how you can make or retain more of your money in these hostile environments called cryptocurrency markets. So yeah, I'm gonna drink a sip of tea. I'm just gonna pause the recording, and I'll be back for you in like 1 second. So yeah, I'm back. So I haven't like really prepared anything of this other than what we've discussed with the team and what I've personally seen. Um, so right now, I think we've seen a lot of people leave because of Kraken, obviously, because it's just not a sustainable. Um, yeah, what they are doing, it's just not sustainable, and rightfully, a lot of people just are like, yeah, I'm not gonna risk it. Um, so that's what we've seen at the end of 2025, and we've also seen a lot of people who take a lot of risk leave. And yeah, I kind of want to go a little bit deeper into this topic because we've also sent out a poll on how we could improve, and a lot of people, I think, like 50% of all the votes, people voted like, yeah, we want higher returns. Um, and obviously, yeah, you can get higher returns and um, better results, but right now in the current market environment and yeah, like the hostility I was talking about, it's really hard to um, get decent returns. And of course, it's easy to like outperform the S&P given the volatile nature of the cryptocurrency markets. But if we take a look at other traditional finance equities like Nvidia, Palantir, or even commodities like gold and silver, yeah, I mean they're just going completely parabolic. And at this moment, of course, it's a little bit cooling down because yeah, holidays, and it impacts everything. But to actually outperform these assets, these commodities or these equities, whatever you want to call it, um, is really hard, especially if you're exposed into a market that's underperforming, and you really want to get that juice out. You really gotta be more discretionary on where you're gonna increase your risk. And a lot of you want passive income from Pinot API, and comparing passive income, like with very little interaction with our platform, with high returns, is a mix for disaster, basically. And that's what we've also seen. We've seen a lot of people who like to kind of gamble, who have like a gambling mindset. They want to just run risk reward high or even Mars attack, and yeah, act like it's always going to be in their favor. So for a while, that's just how our algorithms work. They will make a shit ton of money, but eventually their luck runs out. They no longer roll the dice and get 6. No, they just roll 1 and they get into a extensive period of drawdown, or they liquidate themselves. And that's what we've seen with a lot of high risk traders, that they manage to amass a huge amount of money. So I think maybe returns like 600% in a couple of months. after which they get less discretionary, they get overconfident, and they lose everything trading some shitcoin. So what I want to write down is stay away. Yeah, this really sucks. I'm doing this in Paint. Let's do it like this. With my mouse, by the way, from shit. So this is like the main objective you should have for next year to really outperform nearly everyone in the markets. That's just stay away from shit. And I actually want to add this to it because I cannot emphasize this enough. Like, we've seen a lot of users who made a shit ton of money, who eventually gave everything back because they got overconfident. Yeah, I'm not gonna name any names, but those people, they know it, and some will never return to Pinot API actually, and some will even never return to cryptocurrency at all, because it's so mentally tasking. It's so incredibly hard to overcome a huge loss, to get back to the drawing board, to accept that the fault is actually your own. Like, actually reflect with yourself, look into the mirror and say, I am a retard. And don't get me wrong, I've done this myself a lot. I've lost more money than a lot of people in my country make their entire life. And I had to reflect and bite the bullet and accept that, yeah, sometimes I'm just retarded. I'm just not made for this. So yeah. Stay away from shitcoins. Yeah, and let's not hang too long with the shitcoins, because we've talked about it a lot in the community, in the Dutch channel, but also in the international channel. Just stay away from shitcoins. I want to end and conclude with on the shitcoin trading and the gambling. I want to tell these people, like, if you were trading Bitcoin or even Ethereum, you would have kept your money, made a little bit less money because, yeah, lack of volatility, right? But you would have had a steady increase of your portfolio growth. So please, and that's really, I hope the people who are impacted, they hear this. Just trade something less erratic, less manipulative. Like these shitcoins, they have so little liquidity. You're basically playing with some Chinese quant who did a study of like 10 years to beat you, and some supercomputers. That's who you're facing off with using Pinot API. And yeah, our system is good, but it's not like it's made to compete with these high frequency trading algorithms, which are, yeah, just on top of the food chain on your shitcoin. Trade something that has volume, like actual volume, sustained volume for a extended amount of time, and it will really change the way you mentally are in the market, because they will not fail overnight. I've seen people trade instruments, I kid you not, that went up like 15% under 30 seconds. And of course down as well. And if you trade something like that, yeah, our system is built for speed, low latency, so everything will work and click. And it will generate a lot of profits in a short amount of time. But please understand that there's other algorithms abusing this, and even exchanges. I don't want to go too deep into the rabbit hole, but even exchanges abusing this low liquidity to try to get you and get your money. So really be careful. Just trade bigger instruments. It's not that hard. You just have to accept that mentally you will not make money every single day. Okay, moving on. I'm first gonna drink a little tea again because my throat is getting sore as fuck. And then I'll continue. So yeah, the other topic, and let me just write it down to keep it nice and organized for you guys. Stay away from shitcoins. Oh. So the second topic I want to talk about is people who actually did all the right things, but still ended up with 1 or 2 instruments in the hodl. In this current circumstances, if you have no hodl, you are really, really good. And your selection or the luck you had is really, really, really good. Because even Auto API were stuck with some positions in Solana, which is like the 4th or 3rd biggest instrument on the market right now in volume. So it's not completely unavoidable. All that matters, if you get into a drawdown position, is that you have enough room in your hodl zone to actually survive that extended period of time. And what we've seen, there's a lot of users who have really, really grown in the way they manage their risk. Where even on 1010, like a couple months ago, when the market just went violently down, they only lost money because Kraken shit the bed. Like, we had a few users who got liquidated because they had too much weight distributed over a couple, like they narrowed down too much on a certain instrument, but the majority, everybody survived. And that's really, really something to take with you to 2026, because if you manage to survive a event like 1010, a massive liquidation cascade, you will be fine in most, if not any, market circumstances, because the game stays the same. You just gotta survive the rough weather, basically, and after the rain there will be sunshine and your risk will be reset, as long as the fundamentals of your instruments are solid. Not good, but solid. They have to be solid. So if you're trading something like Filecoin, like Phil, ticker Phil, there's a huge chance it will never ever get back to your break even or even be sold in profit. Because the fundamentals, they might have been good, but something happened, liquidity dried up, and everybody left is just holding the bag. If you trade something like a Bitcoin, you can tell, like MicroStrategy, Michael Saylor, he keeps buying. With a lot of big other companies and firms, they keep buying, which means they expect the value of your instrument to go up over time. You want to have this acknowledgement. You want to have this, like, you want to see other people approve your buys if you're long, of, okay, my instrument is going up. You can either use like Twitter or X or whatever, or you can use it to just like test the water and see what the sentiment is. And please don't get me wrong, there's a lot of shitcoins who have a huge paid community, paid in the sense of that the developers or the venture capitalists, they are paying people on social media to shill and talk positively about a project. You really have to narrow down. So a good instrument for next year it has a long track record. Good volume and yeah, I think these are the two most important factors. We don't want to go too in depth on our analysis on instruments. I just think it has to have a decent track record of like 1.5 years on centralized exchange, so not on a decentralized exchange. Good volume, and you want to just, yeah, you just want to see that there's no weird shenanigans going on in the background. Because, for example, right now we have Hype from Hyperliquid, a huge and good project. Don't get me wrong; they are really, really innovative. Um, but they got shilled so much by big so-called traders on X. Like everybody was like, yeah, if you don't get on Hype, you're gonna miss the next Bitcoin and everything. And right now, I think it's down like minus 50% already from the all-time high. And everybody who got in, I still gotta see it go back to break even. I'm not sure if it's ever gonna happen. And that's because there's a lot of external money, like venture capitalists, but also just wealthy people who invested early and now started to scale out. And who's going to be left? All the retail holding the bag. So you really want to be careful with projects, especially newer projects, with great price action, great marketing on because I call it marketing. It's not like a real community if they're all talking in the same way. Um, you really want to be careful because they tend to really trap you. Um, yeah, so really do your due diligence on the instruments you're gonna trade. Make sure the fundamentals are solid, and to really know if a instrument is good, you really have to see it during a period of volatility. Like if Bitcoin is correcting like 20 or 25%, if your instrument is not going minus 65 in a liquidation candle, it's a decent instrument. But most altcoins, like even Link, Chainlink, Atom, they all went minus 60 to 70% deviation in a single hour candle. And that's really something you want to stay away from because those are dangerous. If they do not recover, you're going to be stuck for a very, very long time, maybe even open ended. So, yeah, that's something we've seen with a lot of people. They just got stuck. They did their weight distribution good, so they just used one weight for every instrument, but they still got stuck because the price just never recovered. And that's all in the fundamentals, because if something is fundamentally good or fundamentally sound, whatever you want to call it, people are going to buy it for low prices because they expect the price to go higher. If it's shit, if it's a meme coin, it's just speculative. It's the same as going into the casino and gambling. Yeah, let me take another sip. Alright, let's continue. I even had some chocolate, which is also something I should reduce next year. Anyways, I've also added real companies interested in collabs or buying. And this is really important. It's equal to MicroStrategy buying Bitcoin every once in a while. You want to see big parties putting their money where their mouth is, actually buying on chain, visible for everyone to see your instrument. It's really good. It's really good because it's not. Then you're not the only one actually holding a bag. There's big companies with real money holding the bag. So let's make it a best of 3 to keep it simple and not too long. Number 3 is weather the storms efficiently. And what I mean by weathering the storms efficiently is that even if you end up being in a hodl zone position instrument, you can isolate the risk, as I've written a article about. And once you've isolated your risk, you can just simply create a new API, add the excess balance from your hodl position to that API, and actually continue trading. That way, not all your money is sitting idle, waiting to be freed from that hodl position. You just keep the money required to not get liquidated into that one API with a hodl position, and all the other money you just put into a new API where you continue trading, starting afresh. Now, something I really saw this year and also discussed with the team, and they are way more defensive than I am, like Robert Jan and Jan, is shorting. As you might know, I've shared some articles or graphs on the impact of shorting on cryptocurrency markets. I really think, and I'm a real advocate of this, I really think that shorting has a edge over longing. And of course, while we are ranging, while we are just after a big capitulation event, you don't want to be shorting because you're going to be holding a bag that could go x 300 400%, where liquidation is really likely for most of you. So when are we shorting? When are we using shorts to basically counterbalance or hedge against one of my hodls, if any? Where are we going to do that? I think what we've seen right now, and I'm going to head back to the chart, give me a second. So we're back at Bitcoin. So yeah, when are we shorting? I think the best way was the 10th of October. So not like we're gonna time something like this, of course not, obviously not. But after this huge capitulation wick, I don't think it's even that huge on Bitcoin, but on most altcoins they just went like 50, 60, 70% minus. There's a retest. And this retest failed multiple times. Like 1, 2, 3, 4, 5, I don't know. Depending on the time frame, I like to look at the higher time frame right now because there's less noise. You could tell, okay, we're not going back to all-time highs. We keep getting rejected. So I might want to scale down on my long instruments and isolate my hodl position, because you might have gotten into a hodl position after the 10th of October. I'm gonna create a second API or third or fourth and start shorting. Now, the hardest part for shorting is not timing where to get out or where to get in. It's actually finding the instruments that go down with sufficient volume. From this point, you could have just shorted all the way down. So all these months, you could have just shorted. And right now, you can still be short. You can still run a setup that's short. Running, maybe something like Near, Cardano, XRP, Ripple. Like, you could just short them. Like, no problem at all. And a lot of people, even my team, they're really afraid of shorting because there's this, and it's true, it's actually true, I'm not gonna try to debunk it, but you can always get liquidated. Like, with a long, the price can go minus 100%, right? But if you have more margin, you can never ever get liquidated. The only way you can get liquidated is by getting, or partly liquidated, is by getting delisted, which we've also seen this year a lot. But for shorts, the price can always go up like 200, 300%. So theoretically, there is no safe in shorting. But like the charts and the graphs I've found, and the research I've done, it basically tells you that there's more money to be made in shorting than in longing right now in the current market environment, and even this year. So you would have made more money just running a short setup on certain shitcoins, or maybe even Bitcoin right now, which we are looking at, than any long setup. So if you see something like this, okay, we failed to, you can even look at the 4 hour. If we fail to get back into this all-time high little range thingy, and we keep making lower highs, like lower high, lower high, lower high, lower high, then you might consider shorting, because you do not want to predict a bottom. You can just simply see the market as it is. Okay, we're going down, so we're just gonna short. And right now we're not above this level, so we haven't broken any new high. We haven't broken this high, so we're still bearish. And as you can see, at this moment, Bitcoin is actually going down. So the next level for Bitcoin is this, to sweep. So you can just continue shorting. And what I really advise you to do, and really want to press that you actually do, is use a setup trade window. And for example, if you're more conservative when you're shorting, just use a 10-10. So 10% up, 10% down. And if price executes a order or takes profit outside this trade window, the position goes to finishing or stopped. So you minimize the risk of falling outside the analysis you've done, and you can always get back in. But please, guys, next year, if it's gonna be bloody, if it's gonna be bad, and you see something like this, you can even look at it on the 1 hour. It takes more due diligence because there will be more bad signals. But even on the 1 hour, you can just short. You can just short shitcoins. And right now, let's take a look at the top in volume, which is not a lot. Yeah, I wanna. I would stay away from SEC king shit. But let's just take a look at XRP drawings. Look, it's similar. It's just similar. And this is the 1 hour. You're gonna see lower highs, lower highs. This is maybe a move where you wanna like finish, and then you get out because it gets sold in profit over here, and then you can see, okay, we made another lower high, I can get back in, and ride all the way down. Please do, guys, because there is a lot of money to be made in shorting. And yeah, that's just all I want to give you guys for next year. Just don't be afraid to run a single or multiple setup short. Just make sure to use a setup trade window. That's what it's there for, and protect yourself from like parabolic moves to the upside. But even some coins, let's find some examples. Excuse me. I think ADA is a nice example. Let's take a look. That's not really a nice example, but let's say you're short here. This is in here. I would have finished because it's a new. It broke this high. But let's say you're short. Yeah, I kind of try to find something. Yeah, like this. Something like this. This is a nice example. You're short all the way down. Then you know, okay, this is a high that has to be broken before I switch to finish, or even stop when you can. And as you can see right now, it will finish, but because the price goes very violently up, like 40%, you might get some sweaty hands. Most of these parabolic moves, and if we have a look at volume, I think it will also indicate Most of these moves are just clear manipulation, and they will retest 50%. So 50% of the entire move, most of the time even more, because we will be sweeping that mark, will retest. So even if you get caught into something like this where you think, oh fuck, we're going like plus 300%, I'm gonna get liquidated. No, that's not how markets move. It will retest, and of course there's like shit coins or coins that have really crazy news that do go plus 300%, but this mostly goes paired with a strong Bitcoin. If Bitcoin is not strong, like range bound, and range bound for the beginners is like just moving like this. If Bitcoin is moving like that, you can just short coins like ADA. Because if it goes up and Bitcoin is still just range bound, it's just manipulation. And it will retest and you will get out and even make a decent chunk of profit. And after this, let's say you got out over here, you can always readjust, just wait because it's stopped, you have no risk. And over here you can look, okay, this is the new high, it has to be breached before I switch long maybe. It doesn't, it creates a lower high, market tells you, okay, I'm not strong enough, let's go, we're going short again. You can just short all the way down until we breach a high. Like here, you can finish again. It's not that hard, guys, it's not that hard. So yeah, I've added weather the storm sufficiently, short, don't be afraid. Isolate your risk, short, and do what the market is telling you. It's really, really easy, and it's one of the approaches I really respect. You can always be long. You can always just be a perma bull and weather out the storms by isolating your risk in a hodl, creating a new long setup on a new API, and just continue longing. But you would be compounding something that the market is telling you it's not respecting at that time. Instead, you could just open a setup that's short. But if you really are comfortable with longing, just long. Stay long, but make sure your risk is managed in a way that yeah, you do not distribute all your weight on like one shitcoin or something like that, and you'll be fine. The majority of you guys did it well this year, and didn't get liquidated. You actually made money. You might be in drawdown right now, but if it's a fundamentally sound project, like a solid project, a solid instrument, you will be fine. It's just gonna take time. So isolate, move on, either short or long again. If you take these three things into next year, you're just gonna make money like this year, like last year, and you'll have a good time doing it. I think I want to really emphasize that the last one will have the most impact. I'm not even sure what this is. But the last one will have the most impact on your performance. So the people who want more better performance, higher returns, try shorting, guys. And even Auto API, a few days ago, it told us like, okay, there's like 55%. We're actually gonna head to short. We're gonna reduce risk, and that's why we also paused all the trading on Auto API during the holidays, because we had the first signal that we could actually go short. And we will. If next year it's gonna be bloody, we're gonna short because we want to make money and we want to reduce the amount of time that your money is doing nothing. We want your money to be working for you, and you should want the same. But only if you're really comfortable in doing it. But really try it. You can just try it with one API with $500. Just try a little shorting and you'll see it's nothing to be afraid of. It might feel counterintuitive, but it's actually really easy. So yeah, man, we're already like 45 minutes in as we speak. Um, yeah, let's not drag this any longer than we have to. I want to thank everybody, like everybody, for this great year. Um, I want to thank my team: Jan, Johan, Robert Jan, Anne, Brent, um, Robert Jan. I always feel like I'm missing someone. Like everybody involved for your support, making Pino API better. Um, I want to thank some of the community members like Perry, Glenn, um, and some others. Like you guys are awesome. You helped a lot in the support channel as well. Um, yeah, I really look forward into next year. I hope your dreams will come true. You get better at your trading. You're really gonna make nice money. Um, yeah, thank you guys. Really from straight from my heart. Um, Next year we're gonna release the leaderboard, which will be optional. Don't be afraid. Your performance will be shared with the world. It will be optional and anonymous. So you will just have an anonymous name featured on the leaderboard, where you will be able to track your performance with others, compare it, but also see community-wide which instruments are doing the best, long, short, etc. So it will help you in making better decisions. Damn, there's a lot of fireworks outside already. Crazy. I'm not sure if you guys can hear it, but it's crazy. And it's just in the afternoon. Anyways, yeah, thank you guys. Um, yeah, also next year, yeah, we might have to start doing some marketing because we've seen a lot of people leave because of the Kraken shenanigans. Hopefully they'll return if Bybit Futures gets approved for the MiFID 2, which I also expect somewhere maybe Q2, Q3 next year. Um, because it really hurts us as a company. Like if we lose like 25% of our users due to external shit, it's a big amount of revenue that just disappears, vaporized, churned, which is bad for business, basically. Um, yeah, guys, I hope you guys have a great end of 2025. Make sure to yeah, the, do the fireworks safely. Keep all your fingers because you won't be able to click if you lose a lot of fingers, and make money in crypto. Uh, but I hope you guys stay healthy, and yeah, I see you guys in the community and next year. Thank you, and have a great time with your family and friends. Bye bye.